As you might imagine, I get a lot of questions about crypto these days. Besides fanboys begging me to shill their favorite shitcoin, one of the most frequent questions I get is what cryptocurrencies I hold as part of my own crypto portfolio. Now, while I actually give a breakdown of my cryptocurrency portfolio in my weekly newsletter, many of you have been wondering why my portfolio looks the way it does and how it has changed over time. So today I'm going to take you through a few of the top cryptos in my personal cryptocurrency portfolio, why I hold them, and I'll walk you through my personal crypto investing strategy. I hate to be a buzzkill, but there are some disclaimers I need to distill. My casual clothing doesn't deceive you. I am not a financial advisor and nothing in this video is financial or investment advice. You should also note that this video only discusses 5 of the 14 cryptocurrencies I currently hold. If you're wondering what those other 9 cryptos are, stick around till the end and I'll tell you all about that weekly newsletter. Now, if this is your first time here, lend me your ear. My name is Guy and cryptocurrency is my career. If you've been looking for quality crypto content, you've come to the right place. Coin reviews, tokenomics, market analyses, and crypto economics are just a few of the courses on offer here at the Coin Bureau. If you consider yourself to be a crypto fanatic, subscribe to the channel and ping that notification bell while you're at it. And since you're already looking in that general direction, take note please of the timestamps in the video timeline that you can use to skip to different sections. Okay, without further delay, let's take a look at some of my top crypto plays. The first cryptocurrency I hold is the one and only Bitcoin, which currently makes up about 27% of my crypto portfolio. I wholeheartedly believe that Bitcoin is the best hedge against the current monetary system, and I unironically consider BTC to be digital gold. This is because BTC has a limited supply. This supply is quite equitably distributed, and BTC has stood the test of time as a currency. This isn't to say that Bitcoin doesn't have its fair share of flaws, though. Bitcoin is definitely not the most efficient cryptocurrency blockchain out there. Even when you factor in scaling solutions like the Lightning Network, it's unlikely that BTC will become the commonly used digital cash Satoshi intended it to be. Bitcoin also has limited programmability, meaning it cannot effectively support smart contracts or run decentralized applications without the use of a secondary chain like the Stacks blockchain. However, there is one thing Bitcoin does better than any other cryptocurrency, fiat currency, or financial institution, and that is storing and transferring value in a secure, decentralized, and peer-to-peer manner. Bitcoin has also become synonymous with cryptocurrency to the common person, and BTC is leaps and bounds ahead in both retail and institutional adoption compared to other cryptos. So given how bullish I am about Bitcoin, you might be surprised to know that BTC is currently not my largest crypto holding. This is because I know that in the short to medium term, the percentage gains are going to be much larger in altcoins, especially now that Bitcoin dominance is dropping. Every penny of those altcoin profits will go towards stacking sats because I ain't touching that filthy fiat with a 10-foot pole. As you might have guessed, my top altcoin bet is none other than Ethereum. ETH currently accounts for just over 30% of my total crypto holdings, which makes it the largest slice of my portfolio pie. Now, before you roast me, allow me to explain why. For starters, Ethereum has the largest ecosystem of any cryptocurrency on the market. This is partially due to its first mover advantage as a smart contract cryptocurrency, but also because it has proven itself to be just as robust as Bitcoin since its launch in 2015. While Bitcoin functions as a store of value, Ethereum intends to be the world computer of the new decentralized internet, and there's no denying that it's much closer to that goal than its competitors at the moment. Over $50 billion is locked on Ethereum's innovative and composable DeFi protocols. Ethereum's 3,000 plus dApps have millions of monthly users, which is magnitudes more than any other cryptocurrency blockchain. This is despite the fact that Ethereum is being dragged down by high gas fees, which have apparently not dissuaded users as much as the crypto media and ETH killer connoisseurs would like you to believe. Most of the booming NFT market exists on the Ethereum blockchain or leverages it in some way. Ethereum hosts and handles the majority of stablecoins and their transactions, and Visa will soon be using the Ethereum blockchain to settle transactions via the USDC stablecoin. Ethereum is also the home of blockchain domains, which are increasing in functionality and interoperability by the day. If you're unfamiliar with blockchain domains, I have previously done a video on it, which you can watch once this video is done by opening a new tab by hitting that link in the top right. Now, with all these facts, it's easy to see why Ethereum is the cryptocurrency of choice after Bitcoin for most institutional and retail investors. ETH holders will also have a say in how the blockchain is run once Ethereum 2.0 is rolled out, which is an extremely valuable thing for many institutional players. Nearly $8 billion of ETH has already been staked on Ethereum 2.0, even though it isn't technically live and won't be for another year at the least. If you didn't already know, some of that ETH is being staked by me. This is where the factual FUD comes in, though, and that's Ethereum's genuine lack of scalability in its current form. While I am confident that Optimism and EIP 1559 are going to remedy these issues, there is a chance a good chunk of capital could start to slip to other smart contract blockchains before they go live. Even though I think ETH offers the best balance of risk versus reward at this point in time, this possibility of capital runoff calls for a hedge. That's where my third and fourth crypto picks come in. The third cryptocurrency in my portfolio is Polkadot, with DOT currently representing exactly 9.34% of my total crypto holdings. I scooped up some DOT when I first covered Polkadot in late August last year. While I did take profits going into the fall of 2020, I've been steadily accumulating DOT since the start of this year, with minimal profit taking, and this is for a few reasons. First, Polkadot is a competitor to Ethereum and seems to be next in line to the throne if anything goes horribly wrong with Ethereum 2.0. This is because Polkadot's founder, Dr. Gavin Wood, is one of the co-founders of Ethereum. Gavin also served as the CTO of the Ethereum Foundation, where he wrote the Ethereum Yellow Paper, created the Solidity coding language, and then coded the first functional version of Ethereum. Gavin left Ethereum in January 2016 to, quote, deliver on the promises that Ethereum could not, which was a reference to Ethereum 2.0, which was originally scheduled to launch in late 2015. Polkadot's architecture is consequently similar to that of Ethereum 2.0, though it uses a slightly different proof-of-stake consensus mechanism and is described with different terminology. As far as I can tell, Polkadot's ecosystem is the largest after Ethereum's, with at least 400 projects building on Polkadot. Although Polkadot has not yet plugged in the parachains required to power the dozens of dApps waiting to deploy, this is expected to begin within the next few weeks, which is much sooner than Ethereum 2.0. This also means that DOT is destined to see an uptick in demand as users start to flock to Polkadot's flourishing ecosystem. This will actually start to happen well before the parachains go live because of parachain slot auctions. In short, this is where projects hoping to launch on Polkadot will be able to put down DOT in a bid to secure a parachain slot on the Polkadot blockchain. This DOT can be provided by the project, by its community, or both. This is going to cause a lot of buying pressure for DOT regardless of what's happening with ETH at that time. Now, if this sounds like a bunch of gibberish, I've left a link to my recent video about Polkadot's parachain slot auctions in the description. That said, these parachain slot auctions will first be tested on Polkadot's canary network, Kusama, and this means it could be months before we see them happening on Polkadot. That's why I've got some money on a second smart contract horse. The fourth crypto project contained in my coffers is Cardano, and ADA accounts for just under 8% of my crypto portfolio. I started allocating to ADA last summer when I noticed that it had gone over 8 cents for the first time in over a year and had been consistently setting higher highs and lower lows in the months prior. Like Polkadot, I see Cardano primarily as a hedge in case anything goes wrong with Ethereum. Cardano's founder, Charles Hoskinson, also happens to be one of the co-founders of Ethereum, though he left the project much earlier than Gavin did. I am a huge fan of Cardano's peer review approach to research and development, even though it has really drawn out the rollout of its blockchain. Still, I have a feeling that Cardano will be running smart contracts much sooner than Polkadot, which would theoretically make it the next runner-up to Ethereum. The problem is that Cardano doesn't have nearly as many projects itching to work on its blockchain as Polkadot does. More importantly, Cardano isn't able to test its smart contract functionality in a real-world setting the same way Polkadot can using Kusama. While I think it's very unlikely we will see any issues with Cardano's smart contracts, I still think the risk is higher than with Polkadot smart contracts for this reason, which is why I hold slightly more DOT than ADA. One big edge that Cardano has over Polkadot and most other cryptocurrencies is the size and engagement of the Cardano community. Some of my most viewed videos are about Cardano, and Charles Hoskinson's YouTube channel seems to be growing even faster than mine. More than 60% of all ADA in circulation is also being staked in nearly 2,500 staking pools. Cardano may not have as many dApps waiting to deploy as Polkadot, but it probably has millions more people waiting to use them, and their hype is sure to be a demand driver for ADA. If you want an in-depth comparison of Cardano versus Polkadot, you can watch my video about that using the link in the top right. Speaking of links, Chainlink is the fifth cryptocurrency I hold, and just over 4% of my portfolio is in Link. Not financial advice, but if you believe in things like DeFi, NFTs, and any other decentralized technologies beyond digital cash, you should consider holding an Oracle crypto of some kind. This is because oracles are required to feed real-world data into smart contracts on cryptocurrency blockchains. Without oracles, dApps and protocols would have little to no real-world utility. My personal preference is Chainlink because it has the largest ecosystem of any oracle. I count nearly 500 partnerships at the time of shooting, and over 80 of these partnerships are with smart contract blockchains. Link is required to pay for data feeds from Chainlink, so it's logical to assume that the price of Link will go up as the cryptocurrency ecosystem continues to grow along with its demand for real-world data. I literally can't think of a single popular crypto project that Chainlink hasn't partnered with besides Cardano, which has apparently opted to build its own oracle in-house. However, there is also no question that the Chainlink team has been selling millions of Link of late to fund their development and expansion. Basic economics dictates that a flood of supply without an equivalent increase in demand will cause prices to stagnate, and this is what we've seen over the last few months on Link's price chart. This short-term effect on price seems to be wearing off though, and I have little doubt that the Link being sold now is going to lead to long-term growth for the project. Moreover, even though only about 42% of all Link is currently in circulation, this is a much higher circulating supply than just about every other Oracle crypto currently on the market. This means that these smaller Oracle plays carry a higher risk of getting dumped on, which is a big part of why I've shied away from holding them. On that note, my top 5 crypto holdings weren't always BTC, ETH, DOT, ADA, and Link. Many cryptos have come and gone from my portfolio, and the percentages of my top plays have changed significantly over time as well. If you're a long-term consumer of Coin Bureau content, you might remember the first edition of my weekly newsletter, which I sent out in April 2020. Back then, 50% of my portfolio was BTC. I'd just reduced my ETH holdings from 25% to 20%. I had 10% in Tezos' XTZ coin, and the remainder was spread between Chainlink, Nimic, Numerai, and the basic attention token. My reasoning for this allocation was primarily because of Bitcoin's halving, which occurred in mid-May. If you didn't already know, the price of BTC tends to spike in the months following every Bitcoin halving. This is said to be one of the main drivers behind Bitcoin's 4-year cycle, which is the basis for many statistical models like the stock-to-flow. I explained why this is in detail in a recent video, but the quick and dirty is that a 50% reduction in new supply will theoretically double the price of BTC if demand stays the same after the fact. Well, we're up about 10x since that time, so that sounds about right. If you want to know why, be sure to watch my video about it. Hit that magic link up there. Anyways, the reason why ETH was my second largest hold was because I knew that the moment BTC started to trade sideways after a price pump, that momentum would move into ETH. When it comes to Tezos, I'd bought into the ICO and it had remained untouched in my portfolio for quite some time. At the time, Tezos seemed like a super promising project, so I reasoned that it would be one of the first smaller altcoins to receive a boost after ETH started to trade sideways, along with BTC. This momentum would then be passed on to Chainlink and my mid-cap altcoin holdings. My prediction was more or less correct, but as the weeks went on, BTC started losing more momentum than I expected, and I realized some of the alts I was holding weren't exactly ideal. So, I sold most of those alt positions, took a bit of profit on my BTC, and put those sats into ETH, Link, XTZ, and ADA, leaving a small cash pile handy to buy the dip or any promising altcoins I came by. Going into the summer of 2020, I could see that Bitcoin was dropping, so I started to reduce my BTC exposure, allocated heavily to my altcoin positions, and even brought a couple of new ones on board. Today, my portfolio consists primarily of altcoins, and this is again because there has been a significant drawdown in Bitcoin dominance. I'm still tweaking my portfolio here and there though, and I'm sure it will look completely different in just a few months' time. Before I wrap things up, I want to tell you about a critical cryptocurrency trading mistake that I forgot to mention in my recent video, and that's ignoring the facts and the stats about your favorite cryptos. As you could probably tell by my description of my top 5 crypto holdings, I'm not married to any of them, not even Bitcoin. I know that each cryptocurrency has its purpose and that every project has its own strengths and weaknesses. Even though I consider myself to be more of a hodler, when I see prices pump to what I believe to be unsustainable levels, I take profits. I always park these profits in USDC because it's a trusted stablecoin with high liquidity and lots of trading pairs. When I see that one of the cryptos I'm holding has cooled off, I add back to my position without trying to fish for the bottom. Sometimes I even decide to dabble in some new altcoins that I think have potential. Sometimes this pays off, but sometimes it doesn't. This is why almost 50% of my portfolio has always been parked in BTC and ETH. Having such a heavy allocation in the 2 largest cryptocurrencies may reduce my reward, but it leaves me with a level of risk that I'm comfortable with. The nice thing about mid and small cap altcoins is that you don't need a big allocation to turn a big profit and stack more sats. This can be easy to forget, especially when you're into a project or start to take whatever its founders are saying as gospel truth. There is no shortage of FUD and FOMO flying around at any point in time, and getting pulled to either extreme is bound to leave you broke. As the saying goes, believe half of what you see and none of what you hear. Always DYOR, and when you look at the data and docs about your favorite crypto, you must do your best to be objective. It might suck to realize that one of your favorite coins or tokens is more of a Ponzi scheme than a paradigm shift, but I can promise you that the consequences of ignoring the warning signs are much worse. I've been there, done that. Well, if you're still here, you must have enjoyed the video. If you did, that like button better be blue. If you want to make sure you get the next one, you know what to do. Subscribe to the channel and chime that notification bell. If you consider yourself a super fan, you can follow me on Twitter, Instagram, and TikTok to get a dose of my daily grind. If you're looking to conquer the crypto market, your best bet is to join the Coin Bureau Insider Telegram channel. I share daily market updates along with any promising crypto gems I'm pondering to put in my portfolio. Oh, that reminds me, I bet you want to know what the other 9 cryptocurrencies I hold are. Wi-Fi, Injective Protocol, XRP. Wait, do I hold XRP? Sorry folks, I seem to have forgotten. Looks like you'll have to subscribe to my weekly newsletter to find out. Besides my portfolio, it's crammed with crypto tips, tricks, and my crypto plans. If you want to look like a true crypto man or miss, you can shop at the Coin Bureau merch store to get stuff like this. Have trouble finding links to all these resources? That's strange. I thought I left them at the very top of the video description. Oh well, you're smart. You'll figure it out. That's all for today, my friends. Guy, over and out.